Mr. Harvey Coe has been recently appointed Managing Director, Transaction Advisory Services at EY. Good morning, Mr. Coe.
Good morning.
What are the latest trends in real estate investment deals in China, both inbound and outbound?
For inbound investments, I think foreign investors are taking a more cautious approach, and they are focusing more on commercial real estate, such as office and retail. I think they are less likely or willing to rather take residential development risk, given the recent government tightening policy. One obvious hot area, however, is logistics. With the expansion of e-commerce and rapid urbanization, logistics properties are quite sought after by foreign investors. For outbound, it's obviously very hot. We've seen a lot of activities going out from China, Chinese developers buying up trophy assets in New York, LA, London, and recently a lot in activities going on in Australia. And also a lot of developers are buying into raw land in these areas for development. I think there are several reasons. One is that the Chinese developers want to generate revenue overseas to diversify their investments from their home market, because the government policy will have significant impact on their revenue income stream. Another possible reason might be more of a symbolic reason, especially for the large developers that are already doing very well in China. They might want to be seen as truly international by establishing their footholds in the overseas markets. Now, very often these Chinese developers, when they go overseas, they will very likely partner up with local developers to form a JV partnership as a way of learning the local market, as well as have a reliable partner to help with the development process.
What is your view on future property price movements in China?
In the short term, I think for cities where there are situations where properties are oversupply, there will be a slight drop in prices. I think will be in the area of around 10%, maybe max 15%. But for areas that are not so oversupply, I think the prices will be very stable. And in the long run, I think China is still a very good market to go into, primarily for a couple of reasons. One is that a massive urbanization plan by the government. Rural citizens are moving more and more into the urban cities, creating a lot of housing demand and creating more consumption. So I think both residential and commercial sectors will benefit from this. And the second reason is the rising per capita income. As more and more people move to the urban cities, I think the income level will definitely rise, and thereby creating more demand for housing.
Some people say that the relaxation of property restrictions might lead to more speculative activities in the sector. What is your opinion?
Probably not. I think nowadays investors in China have more investment options, such as overseas opportunities, where you see a lot of not only developers buying offshores, but a lot of high net worth individuals are buying homes offshore as a form of investment. And recently the local stock market has been doing well, so I think there's another option for them to put their money in. So and relaxation is really a method to spur activities, and indeed over the past year, in some areas, sales have been pretty slow. So I think that's not too much to worry about.